Hello and welcome to a CMS Forex daily video recap. I'm your fundamental market analyst, Nick Nassad. Today is Tuesday, August 24th, 2010. Similar to the theme we had when we came into August, we're seeing a mad dash away from risk and towards safe haven in today's trading. Losses in equity markets and nerves about the slow pace of global growth were the catalyst, and the main beneficiary in the currency market was the Japanese yen. The yen strengthened even as the Nikkei 225 stock index closed down below 9,000 for the first time in 15 months. Taking a look at the currency market, starting with the US dollar Japanese yen, we see it slicing through the 85 level like a hot knife through butter, pushing to a fresh 15-year low below the 84 level. We came to rest at 83.58 in New York trading. Shrinking interest rate differentials between US and Japanese government bonds have supported the Japanese currency as the most favored haven in this rush to safety. With US stocks opening sharply down and a very poor US housing market report to boot, today is looking like a pivotal day in terms of expectations for going forward the rest of the year. While the dollar hit a 15-year low against the yen, the euro hit a 9-year low. We had been watching the consolidation in this pair prior to this week. We had a support line around 109 with a downward sloping resistance trend line. We broke below that level on Friday and stayed below there throughout yesterday's trading, and in today's trading we broke below another important level of support at 107.50, falling all the way down to 105.40. We are seeing a bit of a bounce back now as we film this video at 10:16 a.m. Eastern. This level 107.50 goes back to our lows on June 29th. So we can see that following some gains in the euro throughout most of July, we had topped off coming into August, and then in the first week of August we saw this move back towards in favor of the yen as we had traders, investors pricing in weaker global growth. We had some consolidation, and now we're extending that move. Sticking with the theme of yen pairs, let's take a look at the Aussie yen, a favorite of carry trade, or when an investor borrows in a low yielding currency to park the money in a higher yielding currency in order to collect the difference in interest rates. So what we see today is an unwinding of that carry trade as we moved sharply in favor of the yen during a time of risk aversion. We broke below this support level near 75.90, though we had moved a bit below it on Friday as well, but we cleanly broke it today, falling all the way down to 73.57. So as we can tell here too, we had a bit of a consolidation pattern with a horizontal line of support and a downward sloping level of resistance here marked by a 200 period moving average in a 1 hour time frame. So similar to the euro yen pair, again we see this turn in August where we topped off our rally in favor of the higher yielding currency, and now we're moving back down in favor of the yen, our next level of support coming at 72.70. Finally, if we take a look at the pound yen, here we're looking at the longer term view first. We can see the very sharp slide in today's trading, amounting to more than 300 pips, up to 330 pips from low to high. Zooming in on this pair, we had seen a downward sloping channel that was broken in today's trading in this pair. We had been monitoring this channel most of last week, but we had pretty low volatility. The trading ranges were, stuck to pretty low ranges, but today we've definitely broke out of that consolidation pattern, and we see a very sharp move downward. So while coming back from this week, the talk was that maybe it was less likely that there would be intervention pursued by the Bank of Japan. These sharp gains by the yen throughout most of our currency pairs will stoke speculation that Japanese authorities will take action to protect their export-driven economy. So we'll look to that news during this week. This sell-off comes ahead of data on Friday from the US that will show US GDP in the second quarter revised down to 1.5% from the originally reported 2.4%. That follows last week's data that showed weekly jobless claims hitting a near 9-month high with 500,000. And we had another reminder of the very weak housing market come in today's existing home sales report, where we saw sales of existing homes plunge 27.2% in July to 3.83 million annual rate. Economists had expected a much smaller 14.3% decline to 4.68 million. Now here's what that existing home sales report looks like in visual format. We could see the very sharp drop off from the previous month. We could see we had a bit of a surge in home sales as an $8,000 government tax credit boosted sales earlier in the year, or pulling forward demand, and indicating additional advances will prove difficult. The pace of existing home sales is at its slowest since comparable records began in 1999. In other words, the U.S. recovery is slowing, and while economists and analysts don't necessarily see a recession the most likely possibility, the new normal is for slow growth. European shares were down sharply today as well, with stocks Europe 600 off about 1.8% and the UK FTSE 100 down 1.75%. While European economic indicators have been more encouraging, although their uncertainties do remain, the concerns related to the recovery in the U.S. have increased, and with the continuing flow of disappointing economic data. So we saw Asian stocks sell off, European stocks sell off, and as we came into U.S. trading, we saw U.S. markets, the three main indexes down more than 1.5% as well. The fear about U.S. growth has investors seeking safe haven, and even though the catalyst is the U.S. economy's weakness, the U.S. dollar is still considered a safe haven. So looking at the euro-dollar pair, we actually saw the dollar gaining. But when we had the home sales release come out, we saw that tide turn, and the greenback gave up a bunch of its gains against higher yielders. And as we can see from the euro-dollar pair, we see the euro strengthening, moving to a new high for today, and coming close to testing its highs from Monday's session. So a really important flip here is that now the U.S. Weak data from the U.S. is actually hurting the U.S. dollar against one of its major counterparts, the euro. We had mentioned how the 1.2730 level is a very important level to watch. It had acted as support last week. It was broken and did act as resistance in Monday's trading. So we'll see if it holds up again as resistance. If we break above it, our next level will be 1.2920. Taking a look at another currency tied to global growth, the US dollar, Canadian dollar, we saw most of these commodity currencies like the Canadian, Australian, New Zealand dollars falter overnight against the greenback, but similar to what we saw in the euro dollar, we are seeing a pretty strong move back against the greenback following its very weak housing data. So we had mentioned in yesterday's video that if we manage to stay above this 105 level, our next levels would be 105.80 that we broke rather easily in today's trading, and beyond that 106.80, which we didn't reach but came close to reaching. The Canadian dollar initially was also pressured by a weak retail sales report where sales were up only 0.1% in June, weaker than the 0.4% expected, while core retail sales fell 0.5% following a 0.3% decline in May, and forecasts there had a small gain. So the U.S. session is still in the New York morning trading as we conclude this video. So we'll see if we have acceleration of the moves in the yen pairs, and if we see the greenback giving up more of its gains. As I mentioned, the three major indexes were off rather sharply to open, but again, there's no major event here like a bankruptcy of a major financial institution underpinning today's movement. It's just more general acceptance that the US recovery and the global recovery is slowing, which means pro-cyclical currencies are selling off sharply while safe haven currencies are gaining. If we take a look at the upcoming fundamental docket, tonight we're going to get trade and inflation data from Japan, as well as look at construction work in Australia. Overnight, Germany posts its IFO Business Climate Index. Tomorrow in the US, we have data on durable goods orders and new home sales, as well as Canada posting its corporate profits for the second quarter. And with that, that'll wrap up today's video recap. For more news, videos, and analysis, please visit our site, cmsfx.com. I want to thank you for watching and wish you good trading.